How is it that one person is offered 2% lower interest rate than someone else if they apply for the exact same loan with the exact same lender? Let me show you. Hey everyone, Louis Dip here from Odin Finance, helping you with all your asset finance needs. If your broker asks you if you're a property owner, don't be alarmed. You're not putting your house up for security for your car or equipment loan. Having a property might actually be an advantage. So in today's video, I'm going to show you how this advantage works. Before getting why property owners have the upper hand when applying for a loan, you should know that this video must not be construed as professional or financial advice. In particular, you should seek independent financial guidance from a professional who can advise you on the best ways to proceed in your personal circumstances. Okay, let's jump right in. When a lender is considering approving an equipment loan application, the number one thing they are thinking about is the risk. How much risk are they taking on by lending you this money? And from their perspective, property owners are generally seen as less risky, especially if they have equity. Because at the end of the day, it all comes down to what's called profiling. Lenders tend to favor the property owner because they can see that they have a potential fallback position. Now, this doesn't mean that if you default on your loan, that the lender's gonna take your home. They only rely on the value of the asset being purchased as security. Another reason property owners tend to have the upper hand with loan applications is because it gives the lender the chance to check their payment history. If you already have a home loan or other credit references, lenders are able to prove your track record through loan statements or your credit file. If your payment history is on track, you're less risky to them because you've proven to meet your loan obligations. Sometimes the lender will also consider offering you a much better interest rate. In fact, the interest rate can vary as much as 2% between property owners and non-property owners. There's also another advantage of being a property owner if you're applying for a loan, and that is you have more loan options. For example, with the big four lenders, you can apply for a low doc loan, so you won't need to give the lender the usual verification documentation like financial statements and in some cases tax returns. So there you have it. One person was a far more favorable borrower than the other purely just because they already own property. Hopefully you found that helpful. Remember to hit the subscribe button and stay tuned for more tips about commercial loans and asset finance to help with your business growth. See you next time.